Welcome back, Alpha Hunters. The market just closed for the week of May the 6th, and we didn't see really any volatility. No, none at all this week. I guess just a little bit kind of picked up Wednesday with some of the Fed talk, and then Thursday reversal, and then today just kind of chopped around. So let's get into what really kind of went on this week. So Monday, we kind of just broke down. We got bought up. We got down to the 405 level. You guys know I'm looking for the 400 level. So we didn't quite get there. Tuesday was just kind of a sideways. It was just kind of a wait day because we also didn't really do anything or much of anything on Wednesday. Okay, we were just kind of hanging out until the Fed talk happened. I'll go into a 15-minute intraday chart. And this red candle right here, this was when the Fed released their statement, and then about 30 minutes later they did their presser. Jay Powell did his presser. Basically, the second question he was asked was about the possibility of raising interest rates in the future by 0.75 points or 75 basis points. And he said that is not in the active plan. Okay, that was pretty much word for word for how he answered it. And the market took off after that. That was the question. Everybody wanted to know 75 basis points. And the market took off. Okay. But he did kind of hint a lot that 50 basis point increases going forward is basically going to be the norm for now. And I really wished somebody else at that press conference would have asked if they have run scenario analysis around 75 basis point increases to see if he would have mentioned anything about the possibility that they have looked at it and maybe the market's just not ready for it or something like that. Because then the next day, the market kind of just sniffed it out. Rates basically just went back to climbing quite a bit overnight. And then Thursday just came in and sold down for most of the day. So the fact that we sold down, back to the daily picture, right? We sold down back below Wednesday. The Fed day was extremely bullish day. So for the fact that Thursday we just opened down and sold down, and then today we got back to the lows of the week, we didn't really break down. I did put out a possibility if we got to 400, go and close your bearish positions and pick up bullish positions. I did put that message out in the Discord, and I did send out a message in TradingView, which goes to the Twitter. So I am looking for that. We didn't really get it today. Today was very choppy, up and down. I would imagine we probably get that in the first hour on Monday and then start climbing, okay? Now, last week I did mention I was gonna come back this week and do some analysis. I'm not gonna show off that analysis because there's quite a bit to kind of get through, and I don't wanna make this video that much longer. So I will show off that full analysis next week, but I'm gonna give you some teaser stuff, actually. Show off a little bit of what I was looking at already with some of that analysis. But after two dramatic moves, we're just kind of hanging out. It seems like the market is hunting for the 400 level because really if the market was going to bounce at this level, it would have done it from Monday. We wouldn't have come back down to this level. So I do think we will hit 400 pretty quick Monday and then look for the bounce from there. Okay. So what I want to show you though is I'm going to go to a 1 week. Okay. I'm going to go to a weekly. And I want to kind of show you what this 400 point level is and why I think it is more important now that I found something very intriguing, okay? So I'm gonna go back to the 2000 bear market, 2000 to 2003 roughly. And what's very interesting is from the all-time high that we hit in the beginning of the year 2000, right, as we started this bear market, if I can, jeez, that was kind of annoying. The bottom of this candle right here, this green candle for October of 2000, the bottom of that candle from the all-time high was roughly 16.5%. Now I know if you can't see that, sorry. I know it is kind of small for you guys, but it is roughly 16.5% from there to there. Okay, So if you can't see that, it's 16.35%. So 16.5%, something like that. Very interesting, okay? So I'm gonna go back to today. And what's very interesting from here is as we come down, we're currently where we close today, we're down 14.3%. Today, or this week, we actually got down 15.5% from the all-time highs. And if we got down to 400, that would be about 16.5%. It would be 16.7%. So will it hit 16.35% and bounce? No, I don't think so, because it would be just short of filling that entire gap. I think we will go hit 400. We will hit about 16.5% down, and then we will bounce. I think we'll bounce pretty good thereafter. I think for 4 weeks, okay? Now, another interesting thing to note, though, is so we go back to the year 2000, is after this bottom here, we bounced then for 3-4 weeks. We bounced roughly 11%. Actually, it's about 10%. It was a little low right there, but we bounced roughly 10.5%. Yeah. So about 10.5% over 4 weeks. Okay. So if we did that then this time, not saying we will, but just trying to use some history here, because that's about all we really have is statistical analysis based on the history. So if we do bounce from 400 and go up 10%, that will line up with about the 440 price level. So that is what I am looking for, and that's kind of what I have been conveying in the message I've been saying. You can kind of rewind the video if you want to, but that October 2000 month, we traded lower and bounced, and we actually ended the week green, that we hit the low. So I would definitely look out for that, as we probably just trade lower early next week and then start bouncing for a green week. And we'll probably just start our way to 440 price level. At that point in time, if you have not, I would be looking to buy protection, potentially close out of, long-term assets, that kind of things, bullish assets. If you don't want to do that, you're like, I don't know about doing that. You won't, fine. Just buy some protection. Just buy some puts, hedge your portfolio. I was kind of telling you a couple months ago to kind of come up with your game plan while we were selling down, because I felt like this was kind of it. Just go ahead, but we were going to be choppy in through here until we fully broke down, because it just kind of takes time to kind of turn the market. So we are going to get one last chance to have a buy up here to about the 440 price level, and then at about the 440 price level from the all-time highs, that is roughly a 8% pullback from the all-time high. Okay, a little bit over an 8% pullback. So that is going to be a great time to go ahead and buy your protection, because after that, you can go back and look at 2000, 2001, and 2. There was significant downside thereafter. Okay, so I would be hunting for the protection and start getting that plan ready, because you're going to have about 3 to 4 to 5 weeks here coming up. If we use the 2000 case as the best scenario, as what we can look for on the bounce on the market, and then what we can kind of expect then after that. I don't know how quickly all this will play out, but I do expect we'll kind of go into a bullish mode here for the next couple of weeks. And then after that, I do think we'll probably start rolling over. And you know what? You'll know when we top out on the market here over the next couple of weeks, because once you hear people start saying, okay, we're out of the bear market, that's when we're probably going to start rolling over, okay? Because we're going to be back to within 8% of the all-time high. When you're within 10% of the all-time high, they don't consider that a bear market or a correction anymore. And so when you get to that level and they start talking about it's, okay, the correction, the bear market's over, that is when we're probably just going to roll back over, okay? So be mindful of that, be kind of watching and listening for that. But I have been saying it 400. It's probably coming. It's probably coming early next week. If we don't gap down to that level on Monday, because rates continue to climb even into the close today. The dollar was strengthening, so I would imagine they probably do strengthen in the futures area up until Monday morning's open, and then we'll probably gap down, probably trade down, fill the gap if we don't already open lower, probably fill the gap at 400, because you can see this gap all the way back here. So once we fill that gap, I think we'll see a lot of buying start to come into the market. It'll be probably pretty aggressive. So yeah, whenever we see 400, just close your bearish positions, very much look bullish, and then start to get your game plan ready. Start to look at what you're going to be doing to hedge your portfolio as we probably get about a 3 to 5 week little here bull run. And I will come back next week with the analysis I was going to do on that 2000 to 2003 bear market, so that we can kind of understand the timeline of the options that we want to buy, and potentially like what price level of options we want to buy. And the interesting thing though is this green box that I have down here. I'll zoom out here a little bit. There's is going to be a huge support level, and I do think this will probably be the target zone for whenever we get there. We might get there potentially early next year, mid next year. I'm not sure. So if we do want to pull them back from 440 all the way back down to about that area, it's roughly a 22 to 29% pullback, somewhere in that area. So somewhere around the 26% area of a pullback, and we will be back to pre-COVID highs, which would be very interesting, because I don't think anybody really ever thought we'd get back there. But, you know, when the Fed starts deleveraging the marketplace, that's kind of what happens, because there is historic amounts of leverage in the marketplace. Okay. So that is roughly about all I got. So I'll save that analysis for next week. Show that off on kind of the SPY and the bear market between 2000 and 2003. But pretty much the Qs, they were a little bit weaker today. So I would definitely look for the 300 level as the SPY pulls into 400. And you know what? I wouldn't be surprised if the Qs kind of lead to the upside and they kind of get pretty high as the SPY makes its march to 440. On a percentage basis, I wouldn't doubt it if the Qs probably outperformed the SPY during that little bit of a run, as there's a lot of names out there in tech that have just been beaten up a lot lately. Apple is one of them. I would look for Apple on a breakdown from this week's low on Monday, Tuesday, because it was kind of a strength today, but I think a lot of people were just premature in buying, but we will see what happens on Monday. So Monday morning, there's going to be a lot of names to be buying, that'll be buying up, and I don't think you definitely want to be shorting the market at that point in time, because we are seeing some pretty high levels of bearish sentiment out there. The VIX is kind of still floating up here at these 30 levels. Usually doesn't hang out here all that long. So I think we'll get one thrust really high, and that probably does come Monday. Okay. So that's really about all I got for you. Just be cautious. Right now is not the time to go short or go long, really. You should have already been short if you're going to play this one to the bearish side. So I would definitely look for the bullish play Monday as the market hits, or the SPY hits 400. And yeah, it's probably going to last for about 4 to 5 weeks, 3 to 5 weeks. Okay. So have a great weekend. Don't overreact. We're probably going to get a pretty good bounce here over the next few weeks. And then that would be the time, if this market's been freaking you out, that would be the time to buy protection on the market. Okay. Alrighty. Take care, Alpha Hunters.